Hello traders, and welcome to yet another episode. And today I want to talk about a key point of interest, which I call liquidity. So when we talk about liquidities, basically there is a phrase that goes along that if you can't identify liquidities in the markets, then you are the liquidity. And what does it mean that you are the liquidity? That means that you are going to lose money, all right? So in this video, I have prepared, or I want to talk about how you can be able to identify, to understand liquidities and how you can be able to trade these liquidities, basically to enhance your trading success. So when we talk about liquidity, so what is liquidity? In the Forex market, basically it operates like any other market. If you are selling, there has to be a willing buyer so that a transaction can take place. And therefore, for the banks, which you call the smart money, the smart money or the big boys, the institutions, if they want to buy a currency pair, they will need sellers in the market. So the existing facility to place these positions in the market is what we are calling liquidity. In another way of looking at it, when we talk about liquidity, we are saying that liquidity is defined by stop losses, and where the stop losses exists, that's where the liquidity exists. So the banks will usually activate the stop losses of existing orders to place their positions in the market. And that's what we say taking out liquidities or taking liquidities, all right? So the banks will always manipulate prices of because of liquidity. And why will the banks do that? It's because you find that these banks negotiate large trading volumes, and sometimes it becomes difficult to find the other side of trades. Remember, we said that if you are selling, there has to be someone willing to buy so that a transaction can take place. So these big banks, they operate or they trade with big volumes. So they place big orders. So sometimes it might not be possible for them to get someone else who is willing to place the opposite of that order so that it can be a zero-sum game, right? So what they do now, they manipulate the prices so that they can have their positions in the market. And how do they manipulate the prices? Basically by activating the stop losses of existing orders to place their positions in the market. So we have two types of liquidities. We have the buy-side liquidities and we have the sell-side liquidities. So when you're talking about the buy-side liquidities, here we are looking at the highs. So we will be looking at the previous monthly high, previous weekly low, previous weekly high, previous day high. We'll be talking about the high of the day, the swing high, and also equal highs. So basically buy-side liquidities is here we are looking at the highs, the previous highs. So the buy-side liquidity is always originated by the stop losses of sell orders. And after the buy-side liquidity is taken, the market reverses to the downside because banks use the buy-side liquidity to place sell orders in the market. So when the market takes out a previous monthly high, or maybe a previous weekly high, a previous day high, high of the day, a swing high, or maybe an equal highs, the market will sell, all right? The market will sell. So the same case applies to the sell-side liquidity. So when you're talking about the sell-side liquidities, this is originated by stop losses of buy orders. That is, after the buy-side liquidity is taken out, the market reverses to the upside because banks use the stop loss or the sell-side liquidities to place buy orders in the market. So when we're talking about the sell-side liquidities, here we are talking about the previous monthly low, the previous weekly low, the previous daily low, the low of the day, the swing low, and equal lows, right? So what we are talking about is that when the market takes out an equal low, let's say maybe a previous day's low, the market will reverse, right? The market will tend to reverse and buy. Okay, so what I'll be doing is that I'll now be showing you from the markets. We will go to the markets so that now I can be able to show you how these liquidities operate, all right? So let's go to the market and see how they operate. So this is a AUD USD chart. So I want us to look at this AUD USD chart. So as you can see here, this is the daily time frame. So let's even begin from the monthly time frame, right? So when you're looking at it from the monthly time frame, from where the price is, here you can see the market has taken out the liquidities, right? These are old highs, all right? These are old highs, so it has taken out the buy side liquidities, all right? So, and the reason why now we are seeing the market trying to push on the downside, and actually I've been in this trade for this sell. I've been in this sell which I'll show you from the 4-hour time frame, actually using the concept of demand and supply. So the sell that you can see here, so you see the price taking out the liquidities there, the buy side liquidities, and then you can see the retracement, all right? So you'll also see at this particular point, you'll see the price taking out the monthly lows here, right? You can see the monthly lows here being taken out, right? The monthly lows, they are being taken out. And then now you see the price reversed from that, the sell side, all right? So the sell side liquidity is taken out there. And then you can see after the market took out the lows or the sell side liquidities here, the market retraced and pushed on the upper direction, all right? So one thing that is very important for you to understand is to be able to identify these liquidities, because how the market operates. So you can see after the market took out these liquidities here, the market straight went up, all right? So where did it go to? To attack these buy side liquidities, all right? To attack these buy side liquidities. So if you look at this, you'll be able to see so many examples. So for you is basically to backtest, all right? Basically to backtest it. So here you can see the market has taken out the previous or some old highs, all right, some old monthly highs, and after that you see the price pushing on the downside, all right? You see the price retraced. So this is the level whereby the big banks or the smart money are looking for their sales position after they take out the buy side liquidities. So when they take out the sell side liquidities, this is where they are looking for their buying for their buying positions, all right? So we can even go to the weekly time frame, and from the weekly time frame you can be able to see the same scenario taking place. So you can see here the sell side liquidities were taken out and the price pushed, right? The sell side liquidity was taken out and the price push up. Here the same stuff, the buy side liquidity was taken out and now we have the price dropping to this level. Again, if you look at it from this particular side here within the monthly time frame, what you can see in the weekly time frame, you can see the price taking out those liquidities, and then you see price dropping, all right? So that is the buy side liquidity, and you saw the price dropped, or the price sold at this particular level, okay? So again, you can basically look at it even from this particular point that you are drawn here. You can see the price taking out the buy side liquidities, and then now you see the price dropping, okay? So one thing that is very important, a bonus point that I'm giving you here to be able to trade these liquidities, because it is not always every time that you see the price take out these liquidities. What is not guaranteed is that you don't know how far the price can push. All right, you don't know how far the price can push after taking out these liquidities. And what I'm giving you right now, it's going to help you in terms of understanding how you can be able to trade these liquidities in a high probability manner. And one thing that you need to consider anytime that you see the price taking out liquidities, always, for instance, in this case, always look for key points of interest. Basically, even though liquidities are also key points of interest, but you want to have a confluence. And a confluence, this is where you have at least 2 or more reasons why maybe you want to take a sell or why you want to take a buy. So like in this scenario here, if you say that you want to sell, yes, the first reason obvious is because the price has taken out the buy side liquidities. So we know that the price is going to retrace, all right? But now we don't know how far this price is likely to push, all right, so that it can activate these liquidities, all right? So look always, like in the buy side liquidities, look always in the left and see whether we have a key point of interest. So when I look at this scenario here on the left, all right, when I look at this scenario here on the left, what I have here is an engulfing, a bearish engulfing, all right, a bearish engulfing. So this is now the level where the market makers will be using this level basically to have their orders. So as you can see, the price tapped into that, and then from there we see the price pushing on the downside. All right. So you can see the price tapped into that engulfing, which creates a supply zone, and then now as it took out the liquidities, and then now we see the drop. So now when you are selling from that point, at least you have 2 reasons. The first reason, the price has taken out the weekly liquidities. Then the second reason, it has reached a key level, a bearish engulfing or a supply zone. Some may call it an order block, but I'm going to be clarifying what is an order block, what is a mitigation block. I'll be clarifying all that, right? So that is what most of the traders don't tell you, or most of the trainers don't tell you. So this is a bonus point that will help you know how far the market can push before going on the downside, all right? So if you look at this example here, the price has taken out these buy side liquidities here, right? So at the left, we have the price being in a key level. So we have a key level. This is a bearish engulfing, right? Again, another bearish engulfing. But here, someone might say this bearish engulfing is tested, right? So let's even look at it even from the daily time frame, all right? Let's look at it from the daily time frame. So when you come from the daily time frame now, you can be able to, right? You are using the last sell candle here, so an order block, or what you can say it's a supply zone as well, and you can see where the price tapped into when it took these liquidities. All right, you see these buy side liquidities. So when you go to the daily time frame here, you'll be able to see exactly where the price was heading to, and it came into this area, the supply zone, or what you're calling the order block, right? The order block, okay, and then we see the drop. All right, then we see the drop. So even from the daily time frame, now you can also see here where the price dropped to. All right, you can see where the price took out these liquidities. All right, so the key liquidities that were taken here before this liquidity, we have the price taking out these. We have the price taking out these liquidities here. Let me show you. So we have the price come and grab these liquidities. All right, we see the price grabbing these liquidities around this particular point. Right, you can see here the price took out the liquidities here. However, this is another all simple another thing that though it's not really like the liquidities themselves, this one we call it a stop hunt. When the bodies of the candlesticks close below this point, but initially the market reverses, all right? But what I want to show you is that the market was coming to this point of interest. You see that we have an engulfing here, all right? The last sell candle here creates a bullish engulfing, and that's where the market came into before pushing up. So these wicks, they are not just being there for the sake of being there, but they are being there in terms of price trying to reach some key levels. So as you can see also here, this taking out of these liquidities, it was also respecting this key level that we have. So if you go to the 4-hour time frame, you'll be able to see it precisely. Right, when you come to the 4-hour time frame, you'll be able to see that precisely, because from the 4-hour time frame, that's where the level begins from. All right, and you can see this week here came and tapped into that level, and then you saw you see how the price rallies up. All right, so let's get back to the daily time frame and we'll look at some, maybe a few other examples. All right, so let's look at some few examples. All right, so at this particular level, right, at this particular level, what we have here, right, no, that one we have marked. Let me show you. So what we have at this particular point, we have liquidities being swept, right? We have these liquidities being swept here, right? That is the buy side liquidities, right? That is the buy side liquidities being swept at that particular point. So, and when you look at how these buy side liquidities have been pushed, has been the price this week, as it was taking out the liquidities, this week tapped a fair value gap. I'll be talking about the fair value gap, but this is the fair value gap for those that understand the fair value gap. So you can see this price actually tapped inside, right? Inside this fair value gap here, right? So I'll be doing a video about the fair value gap, and you can see after it tapped into the fair value gap, after taking out these liquidities, then we see the price, how the price dropped, right? You can see how the price dropped significantly. All right, you can see that. So at this particular point also, we see the price taking out the sell side liquidity. All right, so the price takes here the sell side liquidity. So that is the sell side liquidity. So we see the price take out the sell side liquidity. All right, and then now we see how the price pushes up. So at this particular point, actually, this is equal lows. All right, there we have equal lows. All right, so we have this and this low, so that's equal low, and the price comes now and sweeps out those equal lows. So looking at it like that, so we want to see at this particular point what actually rests here. Why was the price coming to this particular level? All right, so you look here at this retracement, we have this candle here, right? We have this candlestick, the last sell candlestick. Or even if we take the entire of that, right, the entire of those sell consecutive candlesticks, we can take all of them there and have that as our zone, because that's another way of marking an order block, the last consecutive candles before the price pushed up. And you can see that is where the price, after taking out the liquidities, came, and then we see the price after taking out the sell side liquidities, we see the price rally. So if you take a buying opportunity from this particular point, so that's a buy opportunity there. All right, so you'll be having your stop loss maybe slightly below this particular point. All right, and where will you be targeting? You'll be targeting where we have major buy side liquidities, and this is the point where we have some major buy side liquidities. So after that, the next level that you're looking at is this another point here where we have some another major buy side liquidities, and then finally this particular point. All right, so what I'm saying, major buy side liquidities, so you can see this particular point, the highs here. All right, you can see the high there. So also the price took out that, and you can see the price dropping. Also, this is a major high point around this particular point. So you can see all those were key points of interest where the price reached, and we see how the price dropped, taking out all those TPs. All right. So if we look at it even from the 4-hour time frame, because it works in all time frames. Remember, we said every strategy here works in all time frames because price is fractal. So the higher the time frame, the more solid or the more number of pips that you're going to look at. All right, so let's look at this example here. So at this particular point from the 4-hour time frame, you can see the price taking out those sell side liquidities. All right, so you can see the price hunting these liquidities, the sell side liquidities. So after it hunted the sell side liquidities, or after it took out the sell side liquidities, where did these wicks come to? All right, this particular level, this is where we have a key zone, right? That is the engulfing. And you can see the price tapped into the bullish engulfing. So that's how you know. This is basically helping you to know how to take your positions so that you can have what you're calling points of confluence, right? So, and after it took out the liquidities there, so this is how you take your position, right? This is how you take your position. So, and where you'll be targeting the liquidities that we have there, and also these other liquidities that we have around that particular point. So targeting the buy side liquidities, because you bought when the price took out the sell side liquidities. All right. So, and again, from this particular point as well, you can see the price pushed up and took out these liquidities. All right, you can see the price pushing up and taking out these liquidities. All right, so after they took out that liquidity, which basically this one is what we call a stop hunt. All right, stop hunt. Because when you're talking about a stop hunt, this is whereby there is a movement, or this is when the market basically moves so as to neutralize liquidity. That is the stop losses. So it's what we call a force fake out, or a force breakout above or below where there is liquidity. So this is where we have liquidity. So we see the price of the candlesticks, all right, pushing above this particular point and closing above that. Nevertheless, we shall speak about that as well. Right, so, but you can see at this particular point, we have an engulfing, all right? We have an engulfing there. So the price comes and taps into that engulfing, right? Into that engulfing. Let's even watch that from the 4-hour time frame. All right, I mean from the daily time frame. I'm not sure where I marked it. Let's go to the 4-hour time frame. We see where probably we marked that. All right, sorry about that. Okay, so you can see here, let's even look at it from here. So you can see it here. So this is about May 2024, right? So when you go to the 1-hour time frame, May 2024, so we go backwards here. This is what you're talking about, right? So you can see these consecutive cells. All right, you can see these consecutive cell buy candles here. All right, so it's a key zone that the price tapped. All right, it's a key zone that the price took out the liquidities and tapped into that, and the reason why we see the market do what, the reason why we saw the market sell from that particular point. All right, even at this particular level, guys, when you look here, the price took out these liquidities. All right, the price took out the sell side liquidities, and then we see the price push on the upside. All right, so if you buy from here, of course you are targeting the major buy side liquidities levels here, and you can see the price came and it hit your TP. But how do we take an entry? So let's observe maybe from the daily, from the smaller time frame, maybe around that is about May 14th, right? When we go to the 1-hour time frame, we look at about May 14, because we want to identify whether there was a key level, right? So that is May 14, right? About this particular level, right? So this is the level that we have marked. So here there was nothing, but you can see the liquidities being taken out. But if you go to the lower time frame, you'll find that around this particular level we had an opportunity, right? So let's probably even look at the 30 minutes time frame. All right, about May 14th, from the 30 minutes time frame, May 14th. I'm not sure that I'll be able to reach there, but this is May, June. So this is what we are looking at, all right? So, but what you can see, it's a week, all right? Maybe this was a news week, all right? Which is no problem. So if it doesn't give you a key point of interest where you want to take, which can give you a confirmation to take your trades, there is no need to force it, all right? There's no need to force. So because you have Forex trading is a game of patience. So let's even backtest it from the 30 minutes time frame. So you can see the price taking out the previous, the last day's low, all right? Then the lows of this day, that is on Tuesday. So, and on Friday it came out and took out the lows. So took out the liquidities, I mean the highs, all right? It took out the buy side liquidities. It took out the buy side liquidities there. And then we have a drop. So when the price, so where did this week come to? So this week came to this engulfing. You can see how engulfing candlesticks are very powerful. We talked about this engulfing. I have a video about engulfing. So go and watch that video so that you can know how to identify these bullish and bearish engulfing. They are very powerful when it comes to getting strategies. So you can see the price took out the liquidities here, but it had to push the wick all the way to this area. So these were the big banks are looking at selling. And you can see we had a very nice drop, right? We had a very nice drop. Okay, we had a very nice drop. Look at even this particular point here. So when the price dropped to this particular level, the next day the price came and took out these liquidities. All right, the price came and took the liquidities there. The following date came and took the sell side liquidities here. And this week, can see the week here. So this week basically was respecting this particular bullish engulfing, right? So very, 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 very effective, right? Very effective. Very, very effective, right? So basically, or in a nutshell, that's how you wanna, or you want to use that's how you want to use the engulfings, all right? That's how you want to use the engulfings, or that's how you want to use the liquidities, marking or looking at them in terms of when the price takes out a major level, all right? When the price takes out the liquidities, the buy side liquidities or the sell side liquidities, then you want to look at price tapping into a key level, all right? So like you can look in this particular scenario, you can do just another few examples so as to enhance the concept. So you can see the price took out the liquidities and it dropped. So what is the key level that we have here? Of course, we have this, all right? We have these as our breaker block, all right? These are breaker block because we were anticipating the price to respect these and push up. So therefore, this becomes, after it breaks out, now we wait for a retest. So this is how you could have taken a trade using the breaker block, but we shall going to talk about that. But you see when the price came here, it tapped into this breaker block, and you can see again how the price dropped. That is after it took out the liquidities here, all right? So this is a very powerful concept, all right? You can see also here the price taking out liquidities, right? So the price taking out liquidities, the sell side liquidity, and where did this wick tap? It tapped into these this candlestick, all right? These bullish engulfing. You can mark it in terms of bullish engulfing. So it tapped into that, and we see the price pushing up, right? We see the price pushing up. So ladies and gentlemen, that is all about liquidity. So what we are saying in a nutshell or in summation, what we are trying to say is this. So when the buy side liquidities is taken out, the market reverses to the downside. And when the sell side liquidity is taken out, the market reverses to the upside. How to take your position when a sell side liquidity or buy side liquidity is taken out? Always look to the left and identify whether you are going to see an additional key point of interest. It can be engulfing candlesticks patterns, it can be order blocks, it can be breaker blocks, as long as there is a key point of interest. Even the Fibonacci retracement is a point of interest, right? So why are we doing that? That is an extra bonus, basically to ensure that you have what we call a high probability trade setup. So thank you so much, and ensure to like, share, and subscribe if you find the video being useful, and stick around for the next episode.